Welcome, everyone. Thank you for joining us. I'm Jeanette Brown, Director of Public Affairs at SCAMP, and today's session is Resident Financial Health and Empowerment, New Credit Building Opportunities and Strategies to Support Residents. And just a quick announcement before we get going. This is just a reminder that if you're not aware, the state's COVID-19 rent relief program is now up and running and accepting applications. So if you work with residents, we would encourage you to visit housingiskey.com and make sure that you can help residents get some support. And today's speakers, we have a great lineup for today's panel. So from Prosperity Now, we have Doug, who's going to give us an overview of SB 1157. This is an important bill for members to know about. Some new credit reporting requirements that will impact your residents. And from Asusu Financial, we have Samir and Abby who are going to talk about a compliance solution for SB 1157. And then Mobility Capital Finance, Mogify, we have Bobby and Stanley. We're going to talk about a new Angelino card program that will support the unbanked people in the Los Angeles region. And then we have a developer member, National Core. So Greg is going to talk about some resident financial empowerment programs that they have and that they've been implementing across their properties. This is a quick overview of today's session. We'll leave time at the end for audience questions, so please put them in the chat box or in the Q&A box, and we'll read those out to the attendees towards the end. So with that, I'm going to turn it over to Doug, who's going to lead us off with some comments about 1157.
Great, thank you, Jeanette, and thank you for having me, and I appreciate the opportunity to talk. And I'm going to share my screen so we could take a look at some slides. So just give me a second there. I'm Doug Ryan. I'm a senior fellow and the interim director of policy at Prosperity Now, and our mission is to ensure that everyone has access to financial products, financial stability, and prosperity. And we work in a number of areas. We're based in Washington, D.C. We have staff in different parts of the country, now more than ever. We work on home ownership, we work on small business, we work on credit issues, we work on children's savings, we work on tax policy. We're really excited about some of the components of the ARP, for example, in the tax space. And we do lots of other work, but we also work with partners across the country on legislative matters, including in the state of California, which is what we're going to talk a little bit about today. So I'm going to talk about Senate Bill 1157 that was signed into law by the governor in September of 2020. Then I'm going to talk a little bit about a report that we recently released on financial access, and I will put that in the chat for people to take a look at if they're interested. That just came out earlier this month. So the reason why we have been active in the credit building space for some time, and in particular in the rent reporting for credit building space. So, and we also do an analysis and reporting in kind of outcomes and policies at the state and local level. And we release the Prosperity Now scorecard each year. And one of the components is we look at people's credit. So you can look, this is California, and you can see where the state is. And it's kind of just pretty much where the nation is as a whole, about 57, this is about a year and a half ago, of course, and the pandemic has changed a lot of things. But more importantly is the trend. California is pretty much where the country is as a whole. 57%, give or take, of Californians have prime credit, meaning a FICO of 720 plus. And why is that important? Well, we know why it's important, because of access to lower cost loan products, employment, employers sometimes check credit, insurance products, and the like. But what's really my point here is, coming out of the Great Recession, just look how many people were dinged, and this follows a trend nationwide, and people had to get out of it. So it's really important to give families the tools they can to recover from the economic crisis, which is what we are doing right now. Another example of access of the importance of credit is, of course, the access to revolving credit, meaning low-cost credit cards and the like. So again, California is kind of where the country is, about 77%. The nation as a whole is about 74%, meaning that generally this population will not have to rely on things like payday lenders and other problematic lending tools. So that's one reason why this is important. Again, if you have poor credit, you're not going to have access to a revolving credit that so many of us take for granted. So that's kind of the overview. In California, again, is pretty much where the country is, perhaps not surprising. But mortgage credit, of course, getting a mortgage to purchase a home is really the fundamental, return on your good credit. And this, while this looks really complicated, and it's from the Urban Institute, and I don't want to over analyze this, but basically what you can see here is the blue line is the median credit score, FICO, for a mortgage in January of this year, right? But you can see it's at about 761. It's been trending up regularly since the end of the Great Recession, which was a couple years prior to this. But that means you have to have very, very strong credit to get a mortgage in today's environment. And that's only going to become more problematic. And it's particularly problematic in California, where the housing costs in most markets in the state are so costly. So it's just another example. And then these are just two examples of, this is on the left is what Fannie Mae is doing. And then this is on the right is what the Federal Housing Administration, the VA, and USDA are basically charging. Again, this universe, the FHA, is supposed to serve, more challenged credit scores, lower income families, first-time home buyers. But you could also see that's inching pretty close to really good credit, and it's been on that trajectory for a while. So why am I bringing this up? Again, this has real world impacts, and since 45% of Californians are renters, those are your next home buyers, and so we need a tool to allow them to become credit ready to purchase a home in a very difficult housing market. So that's that's one of the reasons why we're interested, but I also think this is a good illustration of the importance of it. And we worked for years with the Credit Builders Alliance, who you might know. We partnered with them and others in the state. They're based up in Portland, Oregon, but we partnered with others in the state to work on SB 1157. And part of the framework for this was a study that they did in 8 different housing markets and 8 different housing providers, serving about 1,200 families. And they basically did rent reporting for credit. Again, this was an optional program that families could get into, but you can see here on the left is that 79%, nearly 8 out of 10 participants saw an improvement in their credit score. A small percentage did see a drop, but the vast majority either saw a significant improvement or no change at all. And this was particularly impactful on families that had very thin or non-existent credit files. And why is that important? Well, it's important for a couple of reasons. That is often the case of families in assisted housing, like that your members are working with, but also it's also important because it has real world impacts on their lives moving forward. And one thing that I wanted to raise, we did a pilot program in Oregon with 3 public housing authorities in the Portland metro area. And one thing that they found is not only did people see improvements in their credit, but the housing providers actually saw improvements in on-time rent payments. And that should be valuable for everybody in this audience. And also means that families were connected with resources if they had a financial crisis. So that's also really important for families' well-being. They had a resource, they had somebody they could trust to talk to about these challenges. So I want to get into the legislation. So it's SB 1157, as I noted. It was signed by the governor in September. So it's effective July 1 of this year, so just 3 months from today. It's an optional program for residents, so just because you live in an impacted property does not mean you have to participate in the rent reporting program. All rental payments by participating residents are reported to at least one of the credit bureaus. A tenant may choose not to join in on July 1. They can join in later during their lease terms. And a tenant can, of course, choose to stop reporting their rent if they choose to. And then there's a kind of a waiting period if they want to re-enroll. So so that's the easy administrative burden on the housing provider, but it also gives obviously the family control of what they want to do with their data. So that's really important too. Some other components for this audience I think that are interested. These are kind of the who has to offer these services. Assisted housing landlords with more than 15 units, but this also applies to if the owner has more than one assisted housing development, regardless of the number of units in any one of those properties. It also applies to REITs, corporate owners, and LLCs with at least one corporate member. That's really important because that means, as everybody on this call knows, how real estate operations are organized. We want to be sure that they're not using these mechanisms to avoid offering the service to their families. That's a really important caveat. And I should note that the definition of assisted housing is exactly the definition in the California Code. So it refers, the law 1157 refers back to the definition that exists in California Code. So it's consistent with other housing programs. And that of course means federal, state, and local assisted housing programs. Landlords may require a fee for the participating family. That would be either the actual cost or $10 per month, whichever is less. And the late fee or missed fee is not a justification to terminate or begin to terminate the family's housing participation. And those payments are also not reported to the credit agency. So I didn't mean to do that. Sorry about that. But that's the overview of the bill. And as I said, it's starting in 3 months. We had widespread support among many operators of assisted housing, particularly the nonprofit sector. We had a little bit of opposition. We did modify the legislation from its original form to meet some of the concerns of some groups that were either neutral or expressing concern or opposition. We worked actively with the impacted entities in order to ensure not only that it become law, but it actually become used. And we can extend this beyond the sunset date, which is 2025. So we want to make sure this works. People have take it up, and we can scale it from 2025. And just as important, make it a model for other states around the country. For example, Colorado is looking at a version of this, and we're hoping that other states take a look and move forward as well. So that's the bill. I know we're going to have questions at the end, but I just wanted to quickly talk about access to banking, and others are going to talk in this, but we have a new report that I will share. I'll put in the chat when others start talking. You'll see it about financial access. And this is kind of the overview, and people know this. These are some of the numbers of the unbanked and the underbanked in the United States and California. It has similar, actually worse numbers in many ways. And of course, underbanked means you have access to financial services or accounts, but you use payday lending or title loans as well. And the reason we're bringing this up is that access to credit and access to financial services are often very closely related, and we need people to have access to good financial products as well as good credit building tools. And one of the reasons why this is that underserved households spend a lot of money on fees and interest in non-traditional services. $2,400 a year, this is outlined in the report that I'll share, that's a big deal. So actually making financial services more affordable and more accessible to the families that you serve will not only help families become more financially and housing stable, but also help them make their rental payments to you, and that's in everyone's interest. And there are just some components that are outlined in the report. And again, I'll share that about what makes equitable banking. You'll see these are not complicated, minimal fees, real-time payments. Families shouldn't have to wait 3 or 4 days for their pay to show up in their account and the like. And other things like that, like automatic bill payment and savings incentives and things like that. And it's really important. And there's a lot of movement across the country to do this in this space. And we outlined these as well. Basically, for example, requiring banks and credit unions to offer low-cost accounts. That's always been one tool that we've been pushing. There's obviously resistance to that. Postal banking, which happened for 55 years in the United States, there's a bill in Congress to promote that. Again, there's resistance to that. And of course, the USPS has a lot of other issues. This may not be the best time to do that. They would need quite a bit of investment in their infrastructure. A program administered by the Federal Reserve, which there's also a bill in Congress to support them doing to offer low-cost accounts. And then finally, public banking. The Bank of North Dakota, which is the only public bank in the country, started by ranchers and farmers in that state almost a century ago. But then, of course, this has been authorized in California in 2019, and there's proposals in AB 1177 to do just that in something called the Bank Cal effort. And I don't want to talk too much about that because I know others are going to touch on similar themes. But I will post our report. I hope you take a look at it if you're interested. And if you're interested in any component of 1157, please reach out to me, and I'm happy to talk to you, connect you with our partners across the state. And again, I look forward to hearing the rest of the discussion. And again, thank you very much for having me. And I look forward to the questions.
Thank you, Doug. We will take questions at the end. So again, please feel free to post those in the Q&A. So we'll now turn it over to Samir and Abby.
Thanks a lot for inviting us to this forum. Powerful presentation, Doug. Just given what's going on, especially during these dire times. My name is Abe Wemimo, one of the co-founders here at Asusu. And just to operationalize some of the things Doug said, my family essentially experienced not having access to a good credit score. So that's one of the biggest why sequel to Samir and I's corporate experience to start Asusu. So the real why behind what we do is, when my mother and I moved from Lagos, Nigeria to Minneapolis, outside of dealing with 80-degree weather to negative 22 degrees, we didn't have a credit score. We walked into one of the biggest banks in downtown Minneapolis to borrow money, and we're turned away and had to go borrow money at over 400% interest rates from a payday loan lender. So in addition to that, my mother pawned my father's ring, and that's how we started our journey in this country. So this really operationalized exactly what Doug's talked about. And it's not just a fallacy out there. It happens to everyday people, and it happens to my mother and I. So Samir and I started Asusu on 3 core premises: where you come from, the color of your skin, and particularly something like your credit score shouldn't determine where you end up on the wealthiest nation on the surface of the earth. And what we do today is we work with large multi-family owners and operators, and we do 3 things for them. We help them leverage data to answer a simple question: which residents will pay rent on time next month? For folks that can pay rent on time, we can pair them up with a microloan paid directly to the landlord or the property manager. So their net operating income is healthy, and as a society, we're not solving homelessness backwards. And above all, report on-time rental payments data into the credit rating agency. So we report to all 3. Today, our partners have 1.3 million rental units in the United States, and it's just been a wonderful journey. So just incredibly excited to be here today. One of our core focus, particularly at Asusu, is just how do we essentially drive this policy through execution from a technology standpoint. And that's something we've been able to do. And I'll reserve the balance of time for Samir to introduce himself and walk us through the dashboard we've built.
Thanks so much, Abby. And once again, just to reiterate, thank you all for having us. Really just a pleasure to be part of this dialogue and speak to the SCAMP Members Association. Just to introduce myself, my name is Samir, one of the co-founders here at Asusu along with Abby. And the personal impetus for Asusu, you heard Abby's story, but it was really my family's journey immigrating here from New Delhi, India. That journey for my family and many newer Americans is so much harder than it should have been. My father was mugged on his first day. We didn't really have a place for shelter. And most of my upbringing was watching my parents work miracles with limited money and no credit so that I could have some of the opportunities I've been afforded. And so like Abby said, our core ethos is no matter where you come from, the color of your skin or your financial identity, it shouldn't determine where you end up in life. Now, more tactically, we're fortunate to have folks like, Doug at Prosperity Now, and I saw the Credit Builder Alliance on this webinar as well that have advocated for progressive policies like SB 1157 that mandate rent reporting. But what Asusu has been really focused on is how do we help make operationalizing this policy something that our partners, who are largely multifamily owners and operators, something that's palatable from them from an operational standpoint, and one in which we can track it and do it so in a very simplified manner. So what I'll do is share my screen and we can walk through how the dashboard works and how we actually help folks comply with this legislation end to end. All right, so here you can see the Asusu dashboard. This is kind of what all of our partners would see. I'm going to focus most of this time on the compliance certificate, but one of the reasons we felt it was important to share the entire dashboard is beyond the letter of the law, we're very focused on the spirit of the law, which is, are we actually improving the lives of residents and helping them get access to credit, and then more importantly, financial resources and opportunities. And so beyond ensuring compliance with the certificate, we have a robust tracking system that actually measures of the number of units you might own, what percent are enrolled in the program, how many credit scores have been established, as you can see here, the average credit score, the min, the max, and the percentage of residents that have improved credit. We also do things, as Abby mentioned, like help our partners predict risk with this portfolio stability score, which is also available at a building level. And, we take it one step further to really actually outline, and I think, Doug, based on your presentation, you'll find this interesting, but we're actually able to outline people's credit tiers and how those credit tiers evolve over time. And this way, anyone who is kind of in compliance with SB 1157 and reporting out and has to do stakeholder reporting, ESG reporting, any of that sort of stuff, we're moving from this place of rhetoric to what has actually been done. What percentage of my residents have moved from poor or fair credit, which, would be folks that might be, essentially underbanked, where they might only have access to payday loans, title loans, that sort of thing. Are we actually helping them move into good and excellent credit categories? And what does that look like? And then taking it a step further, how many people are actually eligible for loans from the implementation of this program, and what's the average savings per tenant? One of the things we've discovered that's, just horrifying is that bad debt or bad credit can cost you over $250,000 in your lifetime. And so we use those calculuses to actually calculate, if tenants are reporting their rental data and their credit improves, what is the actual dollar amount of savings those people are having? And so, this is really just where we can walk through all of the impact we're having in the lives of tenants. And then we also have a return on investment tab where we quickly touch on the ROI from the standpoint of the landlord. But where I want to spend a little bit of time, and, Abby and I have spent, the last year kind of understanding the legislation, the ins and outs of it, and making sure that we have systems and processes so that our partners can implement this compliance with basically just enlisting Asusu services. We actually have taken each of the kind of pieces of legislation and operationalized it. And so if you look at the core tenets, right, the sections are, is there an agreement or tenant consent component of this legislation? We actually are able to do that both through the letters, but then also kind of adding to it with emails, text message, and flyers. So that way we're making sure that people are really receiving the message, learning what's going on, and getting that full notice of rent reporting. We also track that everyone has indeed received it, both, meeting that standard of postal mail or kind of a flyer given to the resident, as well as more digitally friendly methods, so that we're making sure to meet people where they're at. Number three, we're able to report the data and track that data has been reported into all three credit bureaus. We do Equifax, Experian, and TransUnion. And so the legislation stipulates one credit bureau, but for those folks really interested in having the biggest impact you can, we obviously want it to go into all three credit bureaus. And then we're able to manage the end-to-end, opt-out process so that folks can opt out. As Doug mentioned, that's a 6-month opt-out period before people can re-enroll, but we can track that opt-in and opt-out and give people multiple means through which to do that. They can go to their landlord, or they can email us, call us, text us, or send us a letter. And then finally, dispute channels to make sure that we're reporting accurate information. And in the event that something inaccurate is reported, residents have the ability to dispute that through multiple channels. And so we institute all of those practices that are stipulated in the law, and then we track the buildings and the specific residences to ensure that they're compliant with this. And then every one of our partners gets a certificate of compliance. This is a demo account, right? But we do this at a building level so that each kind of development for our multifamily partners and then for our single family partners are able to have a certificate of compliance. So I'll stop sharing. I'm sure people will have questions for us, but I think, the takeaway for us, Abby and I really want to make sure that there's an easy way to implement a technology solution to compliance with this law. We know that most of our partners are overworked and understaffed, and we want to make their lives easier, but also make sure that residents have access to credit and financial opportunities.
Thanks, Amir and Abby. So we'll move on to Bobby and Stanley, who are from Mogify.
You're on mute, Stanley. Can everyone hear me now? Hello, can everyone hear me?
We can hear you, yes.
All right, great. No, what I was saying, that was an amazing presentation from our Harlem, New York brethren in Asusu. But before I begin, I just want to thank SCAMP for inviting us to present today on the great work that we're doing in Los Angeles, specifically with the Garcetti administration. So quickly, my name is Stan Toussaint, Head of Community Partnerships here at Mobility Capital Finance, also known as Mogify. And I have the great fortune of leading our public sector business, which includes the work that we're doing right here in Los Angeles. I'm just going to take a couple of minutes just to say what Mogify is, what our core platform does, as well as describe, well, I'll let Bobby kind of talk about specifically as it relates to the work that we're doing in LA. So at a high level, Mogify is a Black-led and managed fintech firm that was really started to help folks who are living on the economic margins. What we've been so fortunate to build over the last few years is a truly holistic financial inclusion platform that consists of banking. So when we talk banking, it's a mobile-first FDIC-insured bank account that is safe, accessible, and most importantly, affordable, right? We don't check the check system. Essentially, there are no fees, no monthly minimums, no minimum balances. It truly is built to help those who are financially vulnerable. And then I know what everyone's really interested in is credit building. So part of building a holistic financial inclusion platform is not only one must access to financial services that are accessible and affordable, but the next frontier is ensuring that people could access the credit markets. And it only makes sense that those who are dutifully paying their rent on time, they should be able to leverage those on-time payments to report it to the credit bureaus. So currently we report to TransUnion and Equifax, and by the end of this year, we'll also be reporting to Experian. And the core difference between what has been mentioned or what will be mentioned is we're consumer focused in the sense that we don't work directly with landlords. We work directly with the tenants. So essentially we've removed the landlord from the process. So the consumer could load funds into their, so in this case, their Angelino Connect bank account. And then we could pay the landlord directly. And by virtue of paying the landlord directly, we have the data point, which then allows us to report that payment to the credit bureaus. And lastly, as it relates to just the platform that we've built, the last pillar, if you will, is our financial capability resources, right? And that consists of education, resources, and what we're really excited is the great partners that we've been able to partner with and implement into the platform, because we truly believe this is really gonna help people on their wealth building journey, right? And we personally believe that there are two main pathways to helping to build wealth, and that's homeownership and entrepreneurship. And if done successfully, right, we'll be able to provide access by virtue of the platform, and then people would enter into the next frontier, and that is the ability to manage wealth. So let me quickly just spend a couple minutes talking about the work that we're doing in LA, and then I'll pass it to Bobby. So we've been very fortunate to partner with the mayor's office in LA to really help them rethink their digital infrastructure strategy. And what we've come up with is financial services as infrastructure. And what that looks like is the Angelino Connect bank account. And in a nutshell, it's banking for all Angelinos. And I'll kind of stop here and let Bobby provide a lot more detail as it relates to what the Angelino account does, what it looks like, as well as when it will be available to all Angelinos. Bobby?
Thank you, Stanley. Hi, everybody. Just want to echo Stanley in our gratitude for partnering with SCAMP and for being a part of this great panel. So as Stanley mentioned, we're going to be rolling out the Angelino Connect bank account and the program in partnership with Mayor Garcetti's office. I will mention briefly that although it's a partnership with the mayor's office, I know there's folks on the call from outside of the city, and you will also be able to access this, this account and these features if you're outside of the city as well. You just won't get the connection to the city resources and the city agencies. So to talk a bit about the bank account, when somebody opens an account with the Angelino Connect program, they'll receive a bank account through our partner Sunrise Banks. So it's FDIC insured. You'll get that MasterCard debit card that you see on your screen with the Angelino branding. It has all of the contactless features that are offered nowadays, the tap feature, the chip feature, your information's on the back of the card for extra security. And some of the really important aspects of this account and this card are, number one, we're able to offer early direct deposit at no cost of approved employer checks and government benefits checks. So if you're getting your benefits or your paycheck every other Friday, you'll get access to those funds every other Wednesday through this program at no cost, hopefully offering folks that are utilizing check cashers or payday lenders and getting stuck in those predatory fee cycles we've been hearing about today and that you're all familiar with. This can be an additional option at no cost for them to get those same benefits. You'll also be able to load cash for free at one of our over 200 retail partners throughout Los Angeles. So you'd walk into a 7-Eleven or a Family Dollar, Rite Aid, or Walgreens. You'd be able to go to the cashier and load cash directly with them to be available on your account. For cash withdrawals, there's no fee as well. So you'd utilize one of our over 500 ATMs through our partners Allpoint, and those are at no cost. Additionally, you'd have access to Wells Fargo's ATM network at no cost here in Los Angeles. So between the 500 with Allpoint and Wells Fargo's network, fairly confident that everyone will have a nearby ATM that they can use at no cost. And lastly, no fee mobile deposit. So if you do still get paid in checks or you have checks that you need to cash, you're able to put those into your account, and that's through Ingo Money integration. So similar to many of the services some of us on this call probably use, you just take a picture with your smartphone and you'd be able to access those funds. Also within the Angelino Connect app is the Smart Bill Pay function, which will offer folks two different ways to pay their bills. So you would add your biller information, including your landlord, into this part of the app in terms of the biller's information, but also how much your bill is and the regularity with which you pay it. And then you'd be able to either pay digitally in real time, or if your landlord or other biller requires a paper check, you would just enter that information into the Smart Bill Pay, and Mogify will cut that paper check for you and mail it to your biller on time. So you'll be able to have one of those two options. Additionally, LADWP is being integrated, so you'll be able to see your utility bill. You'll be able to make a direct payment for that utility bill through the Smart Bill Pay app portion of the app. And lastly, you'll be able to send low-cost cash payments to family and friends. And that's not just locally or within the US, but you're also able to do that abroad, and that'll be via MasterCard send. So a really important function and transformative function, and one that we've all been talking a bit about, is the ability to build credit. So you're able to opt in to report your on-time rental payments, but also other eligible bills we can report to the credit bureaus to help boost your credit score. So as Stanley mentioned, reporting to Equifax and TransUnion, and participants will be able to monitor their credit score on a monthly basis via Vantage Score Tracker, which is also available within the app itself. And just a couple of notes on security and safety for many of the registrants that will be participating in the Angelino Connect program. It may be their first time utilizing a mobile bank account or their first time engaging with the digital economy. So just really want to emphasize that is of utmost importance to us. I already mentioned that it's an FDIC insured bank account. There's also fraud protection. So if you believe that your identity has been stolen, someone's been making fraudulent charges on your account, you report that to us. As long as it's within 30 days of your statement, you'll be able to get 100% coverage when that investigation is done. So I just went through the same process with my bank, had my debit card stolen, reported that, was able to get coverage. Angelino Connect cardholders will have that same benefit. We're also hoping to reduce the risk of fraud and identity theft via the Smart Bill Pay. So rather than having, particularly for those that are just engaging with the digital economy for the first time, rather than having them enter their personal information, their card information on various websites over and over for different billers, it'll be centralized within the Smart Bill Pay. And so you'll just have your personal and bank information in the app and be able to make those payments directly out from there. In terms of asking questions about charges on your account or potential fraud, or really anything that a cardholder would need to inquire about to learn more, they'll be able to contact our customer service, which is available via phone, or there's a chat function as well. and that's in English, Spanish, and Korean as of right now. And in the future, we'll be looking to expand those language options to work for more of the languages spoken by Angelinos here. And lastly, I want to talk a bit about the One City Hub. So we talked about there is the financial services portion of the Angelino Connect program. There's also the contactless digitizing of city services and agencies from the city of Los Angeles. So within the app, there will be a One City Hub. You'll be able to connect digitally to your local departments, offices, agencies, and that'll be a two-way street in terms of them being able to notify you or provide you with alerts that you may need to be aware of. Let's say DWP is shutting down your street to do some updates. This is a place that you'd be able to get that information. And similarly, would be able to reach out to the agencies and departments as well. And as Stanley mentioned, there's also going to be financial literacy resources in here, educational resources. There will be a media feed of new videos and other offerings that you'll be able to engage with to learn more about not just the Angelino Connect app, not just Mogify services, but just about improving your financial well-being overall. So that'll all be found within this portion of the app. And again, just really want to express our gratitude for being able to partner with SCAMP, to be here with you all today. That's our contact information. Would love to chat more with you if you have any questions, want to learn more about some of the specifics. And again, really appreciate it.
Thank you.
Thank you, Bobby and Stanley. And last but not least, we have Greg.
Thank you, Jeanette, and good morning, everybody. I want to thank SCAMP for the invitation just to talk a little bit about what we're doing to build financial health with our residents. And so I'm going to share my screen here. All right, are you all seeing that okay? Yeah, great. So I know many of you know about National Core. I represent both National Core and Hope Through Housing. And today I'm going to talk specifically about what we call pathways to economic empowerment, which is really focused on building financial health and long-term assets for our families. But to give you a little overview, just organizationally who we are, National Core, of course, is a developer, builder, operator of affordable housing, both for seniors, families, and special needs throughout Southern California, Florida, and Texas. In total, we manage about 80 properties, have about 8,000 units in total. The Hope Through Housing Foundation, then, which I head up, provides all of our resident social services, resident health services on site for our residents. And it all kind of focuses on 4 areas, which I'll just kind of give you an overview of really quickly. The first one we call Building Bright Futures. That's focused on helping to prepare our youth for future self-sufficiency, super important. Secondly, Pathways to Economic Empowerment, which I'm going to talk about today, which is focused on building financial well-being. Thirdly is what we call Connections to Care, and that's focused on health and well-being for our seniors. And the last one, which we call Unlocking Opportunities, is really focused on formerly chronic homeless and other special needs populations on our PSH properties and other specialized services there. So that just gives you a little bit of context on us. So I share this as kind of an overview of our Pathways program, the different things that we do with our residents. When residents become a resident of National Core, our goal is to come alongside them and their family, their kids, help them identify their goals, and then help them access the resources that are needed to help them reach those goals. And so on the financial side, we do that in a number of different ways. We start with what we call welcome home meetings. We then have group financial education as well as one-on-one financial coaching and counseling. We have a couple of programs we call Money Match and scholarships, and then we have a home ownership initiative. So I'll share a little bit more on each one of those with you. So first, we start with what we call welcome home meetings. And these are meetings that either a services coordinator or our economic mobility specialists, those are essentially our on-staff financial coaches, we'll meet with our residents when they first move in. We'll sometimes have a welcome basket for them where they get some household items, a plunger, that kind of thing. But really the intent is to build a relationship and rapport with them right away and to help them know about the resources that will be available to them as National Core residents as long as they're on our properties. Secondly, like many other housers, we have group financial education, which we offer. Traditionally, we've done this in person. Recently, like many of us, we've shifted to either Zoom or webinars. So that means that that is available to our residents across our entire portfolio. But while I will say we do prefer in person, I know that it's kind of a different quality and we can have better interaction with our residents that way. We do some of that on our own, so our own staff is delivering those workshops, but we also partner with many banks, financial partners, and other nonprofit or community-based organizations as well to deliver that directly to our residents on each site. And the last one here is our one-on-one financial coaching. And this is something we launched about 3 years ago. We found it to be really successful with our residents. We have 3 staff members who are trained as financial coaches. And they come from kind of a credit improvement background, but they sit down with our residents either in person or via Zoom or phone. They dig into their income, their expenses, their credit, their debt, and their savings. And the first step of that is helping them to set personal goals. So we know that if we're going to make tough small choices day to day in order to get to a bigger goal, we need to know exactly what that bigger goal is, and it needs to be something that's personally meaningful to me. And so with each of our residents, we help them identify what is that goal or what are those goals that they're working toward. Secondly, we help them develop a household budget. And so that's really looking at, hey, what do you have coming in from the income standpoint? What do you have on the expense side that's fixed? And then what's left over, and how are we going to manage those dollars that are left over? You know, and for most of our residents, they've never had anyone sit down with them before, help them build a budget. They've never had a budget before. And we find that tool to be incredibly powerful in terms of helping move our families forward in that way. You can see on the right side of the screen there, this is a snapshot from one of our flyers we distribute on property. You can see some of the different ways that we offer help. So goal setting, paying off credit card debt, home buying assistance, cleaning up credit reports, increasing savings, obtaining credit reports, creating a resume, helping with employment, budgeting like I talked about, improving your credit and job readiness as well. So that's all part of that one-on-one financial coaching. Something else that we've developed as part of our one-on-one financial coaching is what we call our money match program. And so we have some private funders who we've partnered with who provided a small pool of dollars. I will be the first to say I would like it to be much larger, but we have a handful of residents on an ongoing basis who are part of our money match program. It's a 12-month program, so we're adding new residents over time, but it's a 12-month program, and essentially they can save up to $200 a month, and we will match it 50 cents on the dollar. And at the end of that 12 months, they get a check from us matching those contributions. And the idea is that this is for our residents who have never saved before, and for them to establish a habit of savings for the first time in their life. And what we've seen is it really does work well. That picture on the top right there is actually one of our Money Match graduations. We actually had our second Money Match graduation yesterday, as a matter of fact. And I'll tell you, I just heard story after story from those residents who said, I've never saved. I never thought I could save. We had a resident who said she's been living in affordable housing for 24 years. She said, I've never had a savings account, but she said, now I do. And suddenly she has $1,800 saved in that account after just 6 months for the first time in her life. And there were a number of other stories there like that. So that program is really powerful. Secondly, in terms of encouraging our residents to continue to pursue schooling, higher education, career training, vocational training, we have a scholarship program where we they can apply for these scholarships, either our high school seniors who are exiting high school and going into college, or adult learners as well. And it's not just community college or four-year universities. This is also vocational training as well. And it's not a huge amount, $500 to $1,000 each, but I'll tell you, it makes a big difference to them. It might be buying a computer, it might be paying for books, it might be for transportation, but just in terms of encouraging those residents to continue to pursue that. That picture bottom right, that's Cynthia, one of our residents, and her 3 boys. She actually just finished her bachelor's degree and is going back for a master's in social work that we're helping her with. And scholarship we gave her was to buy a laptop so that she could get her homework done and had good connectivity, especially during this time. And the last item here is our home ownership initiative. So that focuses, somebody else mentioned, on the importance of home ownership in building long-term assets. Our mission as an organization is breaking the generational cycle of poverty, and we know that home ownership is a powerful vehicle for building family wealth over time and passing that down kind of generationally. And so we work with our residents to help them become buyer ready. We do some of that on our own. We also partner with other organizations, helping them get their credit in order, getting their debt out of the way, and connecting them so they can get pre-approved for a home loan, and then also connecting them with dollars that are available for down payment assistance and closing costs as well. So I just want to bring it back to credit, because that's really been the topic here. And just to share from our experience, what are some of the top credit challenges we see among our residents, and then some of the credit improvement strategies that we've used in the past. So just to highlight really quickly, the first one is our residents leaning on credit instead of savings during hard times. So, when they're in a stressful time, not having, that base of financial savings or an emergency account to be able to tap into, they're leaning on their credit as well. Secondly, overextending their credit balance. So continue to run up credit. Maybe not even because there's a particular need. It might be because of what we'd say, or maybe wants, running that up, not keeping up with their payments as well, and watching that credit balance just balloon over time. Another one that we referenced earlier was utilization of high interest payday loans as well. We have a good number of residents who have done that and have very high interest loans. And then the topic here, lack of positive credit history and lack of an opportunity to build positive credit for themselves. So we're definitely interested in additional tools to be able to do that with our residents. And some of the things we talked about on this call will be really helpful there. Some other credit improvement strategies. The biggest piece for us, we believe, is it's the general education of becoming financially savvy and kind of budget savvy credit wise. So it's not just focusing on credit, but overall helping our residents to make good decisions in terms of their income, in terms of their spending, in terms of their saving, and understanding that. So it's a bigger picture. Secondly, we work with Credit Karma quite a bit. The website there that helps them monitor their credit score and other things. There are also other tools that they can access through that. But that's been a great tool for our financial coaches. And then it's really action planning. So helping come up with what are the specific action steps our residents can take to reduce their debt, paying down their credit balances. Sometimes that's the account with the highest balance. Sometimes it's the account with the highest interest. It depends on that individual. But we do just see psychologically, as we help residents to be able to get rid of some of those accounts that they owe on, they can see the progress and how it encourages them to keep moving forward on that. Also restructuring and consolidating their debt. We typically don't use a third party to help consolidate the debt, because that actually can impact their credit history, I understand, but we'll help them do that individually. So sometimes they can get a lower interest rate on a new loan, which then they can pay off those old loans. So we help them do that themselves rather than through a service. And of course, through that, helping them increase their credit scores. And the last thing I just mentioned here, in terms of building opportunities for positive credit, we do help our residents get a secured credit card, which I think is maybe similar to what I heard from Mogify. I don't know if someone wants to clarify if that's the same or different, but some banks offer secured credit cards that operate much like a debit card, but do help them to build credit as they're using that over time. So I ran through a lot really quickly. Here's my contact information. Or wants to follow up with me afterwards, but thanks again for including me.
Thank you, Greg. Well, while you have the floor, Greg, I'm going to direct the first question to you. So Dara asks, regarding your money match program, how do coaches address income limits, thresholds for benefits, and housing vouchers when you're encouraging building savings?
Yeah, good question. It's obviously a difficult one. So don't have a perfect answer to it, but we work with those residents who are motivated and who realize that even if other costs go up, at a certain point, that they're willing to invest in their financial future long term. So I think part of it's painting the picture for our residents to understand, long-term the benefits of things like savings and home ownership, increasing their income, and helping them see, how, long-term it's going to be better, for them and their family.
Got it. And next question, and there's one from Nancy in the chat box. I think this would be for Doug and Samir and Abby. She wants to know whether or not legal status would affect whether you benefit from SB 1157 if you don't have a social security number.
It shouldn't, and I would let Abby and Samir respond to the credit reporting issue, but I mean, it's very uneven on how the credit reporting, the three credit bureaus deal with ITINs versus, and I think it's obviously preferable to have a social security number. It can be done. You can get your credit report based on other information, but it's quite bumpy and uneven. Abby and Samir, if you have something to add to that, I'd appreciate it. But you are eligible to participate in the program. I should note that.
Precisely, Doug. You're eligible to apply to participate in the program. We can report to ITIN even if you don't have social security number, and we have other flexible ways of doing reporting. It's a little bit cumbersome because the credit rating agencies like to see a full file with all the personal identifiable information, but we can do that. Just takes additional diligence.
Okay. And Sharon asked also about SB 1157, whether tribal entities have to comply with that if they have units subsidized by HUD.
That's a great question. It depends on the program. I mean, if specifically programs that are authorized under the 1937 Housing Act, the Cranston-Gonzalez Act, Section 202, under the 1949 Housing Act, these are all specifically identified as assisted housing under state law. So it really depends on the program and the funding source for the housing that's either on tribal land or operated by, say, an Indian Housing Authority or a tribal housing entity or something like that. You really would need to know the specific program. So it's a yes and no answer. I know that's not perfect, but that's the answer.
I think this one's for you too, Doug. Irma asked, why did the credit score for some participants go down? I believe she's referring to your charts. Or maybe.
Why do they go down, or why? Yeah, well, I mean, it's going to be reflecting on the credit box. I mean, what was actually happening is that it was becoming more tight, that the credit scores were going up for the typical borrower in federal agency programs, the VA, the FHA, or USDA, or rural development. But they have been going up because it's just, that's what happens. The credit is constricted during a recession or other financial turbulence. Unfortunately, that's what's going to happen in all these programs.
I think this one is for Greg. What's the max match for the savings account?
Yeah, so it's typically a 12-month program, and our residents can put away up to obviously they can put away more, but we will match up to $200 a month. So essentially that means up to $1,200 a year.
And Luce asked, do you have a sample template notification to residents about SB 1157?
No, we don't, but I would, that's a great question. And I know Sharon from Credit Builders Alliance posted something in the chat about a program that they're having later this month on the bill. And I would encourage people to take a look at that. And there are materials that can be developed with Credit Builders Alliance and us. We could help to help landlords get the information out to their residents. Absolutely.
And then Francine asked, why are banks so hard on VA lenders with credit?
You know, that reflects more than anything else the shrinking role of traditional banks or depository institutions in mortgage lending. Non-bank lenders are really the fastest growing component of the mortgage industry on the VA side, but particularly the FHA side. You look at Quicken, which is the biggest lender in the country, and it's the biggest FHA lender, and they're a big VA lender, I believe, as well. It's just the fact that I think that universe is getting tighter. There's fewer banks doing those kinds of products, so they're going to become more selective. I think that's the challenge. But there's no reason to go to a non-bank lender if you're, and shop around for your mortgage product. That's the best thing always to do, always anyway.
Well, that looks like all the questions. So thank you everyone who joined us today, and all the panelists. We really appreciate you taking the time to talk with our members. We have another session on April 15th. So keep an eye out for that notice. That will be focused on a housing retention model that 2 of our members have deployed with some very successful results to keep people housed. So with that, we'll say goodbye and have a good day, everyone.
Thank you for having us. Thank you all. Good seeing you.
Thank you so much.
Take care.